What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I forgot my mic. I'm back in the 330 and it's my birthday, 39 years old. And hopefully the sound's okay. Let me know how the sound is at the end of this video. So I really want to go over a little bit of a series with XDTE and QDTE, that they're better than the Yieldmax ETFs. And I'm a believer in the Yieldmax ETFs unless something drastically happens, which you saw a reverse stock split with TSLY, which happened because Tesla had a big bubble. So the Yieldmax ETFs are very volatile. There's a huge risk. Both of them have a high expense ratio, the roundhill and the Yieldmax ETFs. So there is a risk with them. And when it comes to reliability, you're not going to get the most reliable income weekly with the roundhill or monthly with the Yieldmax ETFs. I use the passive income with roundhill in pro shares. You can even add BITO or FEPI or many of those to buy dividend growth stocks. So the income that I receive, hopefully weekly and consistently weekly with all these investments, end up buying the dividend growth stocks in the long run. So it gets to the point where I don't have to touch anything in my portfolio. I'm thinking when I reach maybe 200, 250,000, I might be able to put the brakes on, not put any money in, and let my dividends do the rest, which will be good. So that's kind of the goal for my dividend portfolio, is get to the point with certain phases. Phase 4, I'm hoping, is where I don't have to put any money back into my dividend portfolio. And both the Yieldmax ETFs and hopefully the roundhill with XDTE and QDTE will do well. So I'm going to do a little bit of a comparison as to why I think the roundhill ones are better. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I hope the sound is not too bad. I apologize. I forgot to bring my mic coming back home. Smash that like button. And let's check out the roundhill versus Yieldmax right now. So right here, looking at QDTE, the Roundhill Innovation 0DTE covered call ETF strategy, there's some volatility, okay? And the nice thing is you get the passive income with QDTE weekly. So you get weekly versus monthly versus the Yieldmax ETFs. And I think this is one of the first ones that will start a new era and a new phase with weekly passive income ETFs. So this is the first. This is, look at QYLD, RYLD, XYLD, and all those other ones with the Global X. Okay, I had like a brain freeze. Now look at it with Global X. I mean, they were one of the first. Then you got JEPQ, and then JEPQ, Devo, and NUSI. But these ones are a little bit more advanced now. So, I mean, XYLD, you know, the dividend, the passive income is not as powerful as it was before. That's one thing. Roundhill has not been challenged yet. That's the other difference as well. So I'm going to jump to XDTE. So XDTE right here, of course, they're not going to beat the S&P 500. I just did a month comparison. They're a little bit down. So if the market's volatile, they're going to be a little volatile. Okay. Now, again, they have that high expense ratio. We're going to go over the distributions weekly for both of them. You have some pretty nice weekly distributions with the roundhill investments. So 35 cents, 56 cents, 51 cents, 47 cents. Already that appears to do better than my CONY. Now, I don't know how well NVDY is, so we're going to compare those two with NVDY. So this is the distribution with QDTE, and I'm going to jump to XDTE. So the distribution of XDTE, you get 24 cents, 35 cents, 41 cents, and 38 cents. And I want to thank M1 Finance for adding them very quickly. There's a high demand. So again, this is a pretty good distribution. 24 cents plus 35 cents plus 41 cents plus 38 cents. So that's a pretty nice distribution for weekly. Already, they're doing better. Now the price per share is higher, okay, than the Yieldmax ETFs, but look at this distribution. This is weekly. So we're going to I'm going to do CONY and NVDY real quick. So again, the one thing with the Yieldmax ETFs is they individually follow. Now they're not shares of the actual stock, okay? They do synthetic calls. So the one thing with CONY is the volatility. If CONY or Coinbase options ETF takes a big hit, they take a hit. So sustainability isn't the best. This is why I'm willing to take a risk with my Yieldmax ETFs. And one thing I considered, I don't think I'll do this, but if things go really bad, would I sell all my Yieldmax ETFs into roundhill? That could be a possibility. That's why I tell you guys, you don't have to do stuff because I do it. This is entertainment purposes only. But I want to go over the income of CONY and NVDY monthly. So it's monthly income in the trends. So here's the distribution rates. Okay, when CONY is hot, I've done very well. I've earned really good passive income with CONY. 10/5, 2023, 120, 107, 246, 269, 107, 166, and it's cheaper. So that's the one thing, 279, 228, 169, 157, and $1, pretty much. So it was a little bit down compared to before. And I'm going to jump to NVDY. So at certain points, NVDY has not been the best. So starting in 2023, 74 cents, 95 cents, 81 cents, 92 cents, 67 cents, 41 cents, 50 cents, 62, 153, 260, 119, 256, 247, then 125. So the consistency is not there. Am I still going to be buying NVDY? Yes, because I think there's a really good opportunities with the Yieldmax ETFs with NVDY and specifically CONY of generating great passive income and using that income to buy my dividend growth stocks. Now, if I go to zero or have a reverse stock split or things go bad, still not a loss for me because, again, myself being 39, single, no kids, I can take a loss for the Yieldmax ETFs. I still like Zim stock. That's one thing I may reconsider buying. You have to understand what you're getting yourself into. What I like about Zim is the way they share money to shareholders. I think that's very unique. And I think it's really cool. And people say it's a yield trap, but think about it. They share their revenue with you. Okay? It's a weird distribution the way they do it. And I think that's pretty cool. Now, would I go all in it? No. Okay, so, people say don't invest in yield, but, the majority of my portfolio in the long term is going to be dividend growth stocks, excellent dividend growth stocks, excellent companies, Kroger, Starbucks, Truist Financial Corp. Really good companies. Prologis is a REIT. But the thing is, can I use this income to turbocharge my dividend portfolio? Yes. Is that what I'm doing it for? Yes. Am I going to rely on the Yieldmax ETFs or the roundhill ETFs or ProShares BITO? No. So I'm just being clear with you. I'm aware of the risks. I think it's crazy to go all in all of these. I use a strategy to buy my dividend growth stocks. So it's doing well. I mean, I'm buying shares. I have a lot of companies in my portfolio. I myself versus other people, I wouldn't do that. Comparing myself to other people and thinking of an investing strategy, I wouldn't do that. If I wasn't travel nursing, okay, if I wasn't able to use this distribution of revenue, if I wasn't student loan debt free, I wouldn't be able to invest in these type of companies because I think it would be way too risky to kill my paycheck, okay? I'm just being very transparent with you guys. It's, you have to be aware of what you're getting yourself into. I feel way more confident in a company like Kroger or JP Morgan or Chevron or any other of those companies because they're consistent. There's inconsistency here. The market goes bad, they'll still be fine. It's a buyer's market when the price per share goes down. Those are great companies. They've been around. Now, the Yieldmax ETFs really haven't been challenged if something drastically happens. Yes, TSLY was challenged because Tesla went down, but Roundhill hasn't been challenged yet. They got a new one coming in. And yes, I did throw in 250 today for XDTE. So, that's part of my thought process is, yes, I would love to make $100 a week long-term wise with the Roundhill ETFs, 100, 150, use my revenue on YouTube, use my revenue on X, my revenue on Threads, hopefully when I get monetized, use my revenue on the Instagram and hopefully Facebook in the future, and affiliate marketing, which I make, to load up my Roundhill ETFs. It's very exciting to have this new type of thing. They just started a new trend. You're going to start seeing a lot of companies, maybe Yieldmax, maybe the other companies will follow and go from there. So I'm very excited with them to do that because you don't have to deal with TGIF. TGIF I didn't like. And they're just more consistent than Yieldmax ETFs. So I hope you enjoyed this video. I hope it wasn't too scratchy or annoying. I know my previous laptop, when I would do videos with you guys who are the OGs, my YouTube channel, I want to thank you so much for being the OGs and sticking strong my YouTube channel. And a lot of you guys are new watching this, and I want to thank you so much. I've got like more than 10 subscribers for some of these videos, and I will be posting more videos, especially after boards. I'm not going to tell you when I'm taking boards, what week, but it's going to be sometime in September, and you're going to probably get daily videos from me and a lot of shorts. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to maybe try to squeeze in a video for you tomorrow, so hit that notification bell after you subscribe. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. I cannot confirm that I will be long in the Yieldmax ETFs and or Roundhill ETFs. This is my passive income journey, my investing strategy for entertainment purposes only. And I tell you, you don't have to buy stocks because I buy them. You should go see a financial advisor for financial advice. Go see a tax advisor for tax advice, and go from there. So go to them as a reference for that. I'm just showing you my passive income journey investing strategy, and be aware you have to do your due diligence when it comes to investing because you can lose a lot of money. So as I showed you with the rich uncles REIT I mean, it was going to be amazing if pandemic didn't happen, but I lost some money. So you have to be aware of the risks and do your due diligence when you make investments. Take care and have a good one.